Well, today I'm here in person with Kristine Cranley from the Texas Blockchain Council. This is actually my first in-person recording because I've always done these across Zoom. So we've had a whole bunch of technical problems and we're now recording this live on my smartphone with a nice green screen behind us. So I'll hand over to you, Kristine. You've just landed in Calgary, and would you like to introduce yourself and tell us how your experience arriving in Canada has been?
Well, it's been top notch. I mean, I had front door service just pulling right up when I got out of international. It's a pleasure being back. I have friends in the area and always love it when I can visit.
And can you talk about why you're here? Like, what was the purpose of the visit?
Yes. So the Texas Blockchain Council is in relationship with the Canadian Blockchain Consortium. And they sent delegates down to our summit last year. And so they've graciously invited us to represent at the upcoming event, Mining in Alberta event, over the next couple days in conjunction with the Stampede.
Amazing. So you're here for the Calgary Stampede. And can you talk a little bit about what you're going to be doing during that trip?
Yes, we are having a conference and we're going to be talking about mining in Alberta and just different ways that the technology, Bitcoin mining, can has a synergy with the Alberta grid. And there's a lot of similarities with the Texas grid. So we'll be highlighting some of that, some of the ways that Bitcoin mining can help incentivize renewable build out or bring a return on investment with the typical problems with renewables is it's abundant when there's a lot of sun and wind, and then not so much when that's not there. And so the ways that Bitcoin mining can help financially support by taking some of that power when there is an overabundance and helping get a return on investment for some of those build outs.
Interesting. That's interesting that's a focus here. So I guess it'd be really great to kick off for you to just talk about your background. Yeah. And I would love for you to talk about your journey into Bitcoin, like how you discovered it and that whole story.
How I went down the Bitcoin rabbit hole. Gosh, absolutely. So it was 2021. So we'd all been locked up for a little while. I was living in Washington, D.C. and just kind of watching what was going on in the world and having my eyes opened, I guess, to different things in the world. And I started looking closely at the economy and was looking kind of at the gold, silver bugs and what they were talking about regarding sound money and the money printing and inflation. And then I happened upon Bitcoin and I just fell in love with it. I mean, there's so much about the technology that is so pristine and it's just such an elegant solution to so much of what we're encountering. And I'm one that I guess I have a heart for justice. And so looking at it, not just from the perspective of an American, but from all over the world and places where they don't have the privilege of having the world reserve currency that they earn money in. And so anyway, just coming to understand more and more the solutions that it offers us regarding inflation and something about myself, I just can't not talk about what I feel passionate about. And so right around that time, I was doing commercial property management in a building in Washington, D.C., and the building stayed open through a year of the pandemic, but then it shut down. And so I had a chance to go back to Texas and didn't know what I wanted to do. I just wanted to be in the Bitcoin space. So I created an LLC called Noah's Bitcoin, for Noah's Ark, thinking about inflation and the flood of inflation that I felt like was coming. And I just talked to anybody who would listen to me. And along the way, a registered investment advisor firm who was one of the only ones in Texas that were offering Bitcoin exposure to their clients as part of a more broad portfolio, called me up and invited me to sit for my financial license and join them there. So I have been working there for the last year and a half, and we really focused there. It's kind of like a family office light, where it enables some of the clients that are accredited investors different opportunities outside of stocks and bonds. Obviously, there's that too, but not only Bitcoin, but also private equity investments. So we have really focused on the niche of stranded natural gas Bitcoin mining. So when you drill for oil, natural gas is a byproduct, and if you can't get that to market because you don't have infrastructure or a pipeline, then it's flared, it's thrown away. So anyway, so we've been investing in that for a while and allowing some of our investors to get into Bitcoin mining that way. And then along the way, I have also been working with the Texas Blockchain Council, and they are committed to making Texas the jurisdiction of choice for Bitcoin, blockchain innovation, Bitcoin mining. And so working closely with them during the legislative session as well. So anyway, that's a long answer, but I got pots in a lot of different fires in the space, but mostly I'm an educator at heart. And so I just am always looking for opportunities to talk about Bitcoin.
Yeah. So can you talk about when somebody is investing in Bitcoin mining through the IRA, what does that process actually look like, and what are they actually investing in?
Yeah, absolutely. So just taking a step back, these private equity deals are only for accredited investors. So people that have already made a certain amount of money are the only ones that qualify for these kinds of investments, investments that are not publicly traded. But with the deals that we do, we have different kinds. So we invested in the actual holding company, Giga Energy, allowed us to, invest in them in their pre-seed round and their seed round. And so we got equity in their company. But then we also have done two other kinds of deals with them. So we have some that are Bitcoin denominated. So what we do is we bring our capital alongside Giga Energy or whoever else we're investing in. And we're using that to purchase generators, and those generators are going to take that natural gas and turn it into power. And also the data box, so the place where the ASIC Bitcoin mining computers are stored, and then the ASICs. And so with those deals, our investors get their pro rata share of the Bitcoin that's mined. And so, typically it changes with a difficulty adjustment and how many people are mining, but you're going to want to be below 7-8 cents to be profitable. We're mining at 2 cents a kilowatt hour. So it gives an advantage where if you're investing in the infrastructure at the right time, then over time it acts like a dollar cost averaging. You're just mining every day, and that gets sent to the investors' wallets. Now, we have now added another kind of investment, which is more for dollar income and not so much for Bitcoin. So it's basically an energy arbitrage where we are able to get a very cheap rate for the natural gas. And then we build out a hosting site where theoretically we could mine at 2 cents a kilowatt hour, 2 or 3 cents a kilowatt hour, but then we're going to sell that to the miners and provide a hosting site. So they bring their computers, and then we're just providing the infrastructure, the natural gas generator and the box to hold the ASICs. And so then our investors are getting dollar payouts on the spread between what we have built it out at and would be mining at and what we're being paid at. And so a lot of our investors like that just as a cash flowing option. It doesn't pay out in Bitcoin, but it is a bit of a hedge against the volatility of Bitcoin because it's going to pay out regardless because we've negotiated a certain price that we're getting the gas for. And as long as that's fixed and our costs are the same, then the only thing that may or may not change would be what we're getting the hosting rate at. And so we usually lock that in for, let's say, 2 years. And that can adjust up too. So those are the different kinds of investments that we invest in.
Is that unusual to do that? Like, is your firm quite unusual in the US for doing that, or is that starting to proliferate?
Well, it's a good question. So amongst the Bitcoin community, we're more and more known. Now, the CEO of the firm where I work, he used to be in oil and gas, so he understands the industry very well. He's also been in Bitcoin since 2014. And so he is extremely discriminating about the kinds of deals that he will say yes to. And he passed up on dozens and dozens. And he finally found the first company that we invested in, and he worked on them for a long time, asking them if they would take our money. And they didn't want our money because they were bootstrapping everything. They were very frugal about how they had built everything out. And so we felt very privileged to have the opportunity to invest in them. And then, now there's another company, similar specs, that we're looking at starting to invest in. But again, it needs to be someone that knows oil and gas, and someone that and able to negotiate a low price and the power, and because everything is going to ride on that cost of power. So to answer your question, I don't know. I don't know if we feel like we found the diamond in the rough. And so I don't know who they would be investing in. Now, there's people that you can invest in publicly traded companies like Marathon and Riot. But this is private equity, so they're not a publicly traded company. So we kind of feel like we're giving people a privilege to get into this space where I don't personally know of other ways to get in it other than with a publicly traded company.
And how do you find the sites? Because I think you posted some videos where I think you were on horseback, like going through some wilderness, if I remember.
That was when I was living in Saudi Arabia, actually. I did get
Was that in Saudi?
The horseback pictures was in Saudi.
Oh,
yeah.
Really?
Yeah.
Oh, okay.
I think so. I mean, I do, yeah. That was different. I think I did put on my LinkedIn, it was kind of a joke, like looking for sites in Saudi Arabia. That is true.
I totally took it seriously. I was like, oh, wow.
Well, no. So it's the companies that we're investing in, the mining companies. And again, so it's different than on-grid mining. So most of the mining community is plugged into the grid. We are off-grid. And so that means that we're not affected by the price of power, other than the fact that, these companies, because it's stranded, if they have no way to sell that natural gas, they're just burning it. They're just wasting it. And so the companies that we invest in, again, they're Texans, or they're established in Texas. Most of our investments are in Texas, although we are starting to branch outward. And a lot of it is relationship based and helping the operator understand what Bitcoin mining is and why this would be a good partnership, whether they want to sell us the gas or, ideally if we could even own the whole asset, but that hasn't been economic. But we are in a bit of a sweet spot right now because the Bitcoin price has been down for so long. The cost of the mining equipment is very low. And I think I saw Lisa Huff post something about how when Bitcoin price starts going up, the equipment will go up again and it won't come down as rapidly. And we've had this lull for a long time. And so we always say bear markets are for building. And so we do have an opportunity. The generators aren't going to fluctuate as much, but the cost of the computers makes a huge difference. If you're talking $10,000 a machine versus $1,400 a machine. And so we're trying to build as fast as we can. Plus, another thing that you have to factor in when you're investing in Bitcoin mining is the halving. And so that's coming up next year, and then half as much will be produced. Plus, we have more and more miners coming online all the time. I think the other day, a tremendous amount just came online. We don't even know where it's coming from, right? Is it a sovereign nation? I suspect.
Can you see the hash rate for where it's coming from? I know that's not necessarily.
I don't. That's a good question. I don't think they were aware of where it was coming from, but I do know that Russia, I think, is second to the U.S. and then China. So everyone always points to the fact that China banned Bitcoin, but they're still, I think, the third largest.
People say that, but I'm just like, to me, it just seems so intuitive that it's the Chinese government mining, and people are like, oh, they banned it. This shows that Bitcoin mining is resilient, even in that kind of regime. And I'm like, is that not likely that that's the Chinese government? I would
like kicking out retail so that then they have,
the sovereign fund is probably chocker full of Bitcoin. So I don't know. I mean, I'm always I don't know that that's necessarily something to celebrate on the basis of decentralization. I mean, maybe somebody's bothered to go and look at this. But
no, I would agree with you there. And I think we've also seen the same with oil companies, because we talk to different companies about, have you thought about Bitcoin mining? They're all thinking about it. And some of them are doing it, but they're not talking about it. And I think it's probably the same for sovereign nations, because I think people realize it's so, when you come to understand how scarce it is, and then you look at the broader macroeconomic situation and moving away from the dollar hegemony. I'm not saying that we're going to just completely abandon the dollar, but with the BRICS nations, there's definitely a move to try to open up for themselves other channels. And so just looking at the way that the world is going, a more multipolar world, you have to start thinking about these things. Yeah. So I would be surprised if sovereign nations aren't. But I also am not surprised that they're not going to talk about it, right? Because as soon as they start talking about it, if the American government were to come out and announce that they're mining Bitcoin, well, then the race is on. And then, there's only so much to go around. You'd have to hope
that they're mining Bitcoin, because if they're not, they could be really on the back foot with everything that's going on with the dollar. So, I don't know whether they would be sensible enough to do that, but who knows, right?
Who knows?
It's interesting. Can you talk a little bit about the environmental aspects, because you've touched on the oil drilling.
Yeah.
So just for the benefit of anyone who doesn't understand that, can you talk about why drilling for oil is, or the output, I guess, of when you drill for oil, why that's so beneficial for Bitcoin mining, or why Bitcoin mining is so beneficial to the oil industry?
Absolutely. So when you drill for oil, natural gas is down there as well, and it comes up. And so if you can sell it to a pipeline, great. But there's a lot of remote drilling locations where you don't have that option. And so when you vent it, that's just letting it go into the air. The methane gas is, I think, 25 times more warming, is what they say, than the carbon dioxide. And so venting is obviously going to cause a problem in the environment. So it's normally burned off, but that only gets 91% of the methane out. And so it's still not so great. And it's just throwing it away. Whereas with the Bitcoin mining, if you can turn it into energy with a generator, then it's reducing those methane gases.
The emissions, right?
Yeah.
So basically, you would take the generator to the remote site with the box full of ASICs, essentially.
Exactly.
Plug it all in, capture that methane, use it to drive the Bitcoin miners and produce the Bitcoin.
Exactly. And that is the beauty of Bitcoin, is it's location agnostic. So, and you don't just have to do it with stranded natural gas. So let's say we're talking solar, and in Texas, we have a lot of sun and a lot of wind. And so there's times when there's just too much, and there's no way to get that surplus to the market. You can't, you could put it in a battery nearby for, let's say, a home, but there's only so much of that to go around. It's not like you could pick that battery up and take it to Dallas and sell it there. There's no way to get that power to market if there's more than is needed. And it makes the price of power end up going negative, just because you end up spending money on it rather than making money. And so because you can take those ASICs computers, that data box, plop it down there, that's solar, that's more, it's behind the meter, but it would be grid power. So you can pull it there. You can also, they're making a lot of advances with biomass, right? So you can take, I'm talking to a company next week, actually, and they create generators for farms. And they're able to capture the methane in the dairy farm and turn that into power. And so there's so many different ways where Bitcoin can go to the power source. Let's say you've got a waterfall, right? Or stranded hydro that in El Salvador, they're using their their volcanoes to mine Bitcoin. So that is the beauty. It's so easy to just get those Bitcoin mining computers where they need to go. And because it doesn't damage the machines to turn them off. And so if there's a power emergency where let's say we're talking solar again, and now you need that extra solar, or in Texas, all the mining computers that are hooked up to the grid. Well, when we have a time of excessive heat or cool, and we need more power, we can turn those computers off and supply more energy back to the grid. So that's the beauty of being location agnostic.
I've actually heard that something like 16 seconds, the mining companies can switch off in 16 seconds. It was something insane like that, like this really small number. Can you talk about Texas specifically then? Because you mentioned about the solar there and the wind. I don't know if you know, but do you know what the energy mix is in Texas and like what the situation is there, I guess, in terms of bringing Bitcoin mining in?
We are, interestingly enough, we're a lot of gas, but we are one of the largest for wind and solar as well. We've been really building out the wind and solar. So Texas is unique because, like Alberta, actually, it's deregulated, and so you can bid for the pricing, and so the pricing is going to be
for power, for electricity.
Yeah. So Texans, so Alberta's grid, as I understand it, you can bring in power from elsewhere, and you can sell power out, but Texas is more isolated. So we're our own grid. And so,
do you know, is Texas the only state that has its own grid?
We're not the only state that's deregulated, but I should know this.
As a proud Texan,
oh my gosh, I think we are. I mean, because everyone's always, throwing shade at the Texas grid because
because I remember when there were those big storms and Texas, like, it was so unusual, and everyone was like, oh, see, this is the problem with having an independent grid. And obviously, ironically, now that's ended up being a benefit with the Bitcoin mining coming in, where it's completely flipped the whole thing on its head.
And Bitcoin mining, interestingly, we are not a huge percentage of the energy use in Texas. So last year, I think we were 2.5 to 3. I think we're up now 3.5%. But that's not a huge portion of the grid. But the beautiful thing about the Bitcoin mining coming in is it incentivizes infrastructure build out, because first of all, with the renewables, they really are kept alive by a lot of the government subsidies, because unless we're talking about nuclear, which nobody ever wants to talk about nuclear, but nuclear would be the way to have we call it a dispatchable load, right? So a load that's there, the use of power. It's dispatchable power in the sense that you have it when you need it, right? You don't have the sun and the wind sometimes, like in a storm when you need it. And so
that's what Alex Epstein calls it, the unreliables.
Right, the unreliables. Exactly. So, but it's great that we can harness the power of the sun and the wind. But the problem is that you're only on so much of the time. And so you've got to get that energy to market, and so you've got to be able to make a return on investment, and a lot of it is padded by the incentivization that comes from the subsidies. So Bitcoin mining does help with that, because when you, as we said, we call it the duck curve, right? So sometimes there's too much and sometimes there's not enough, and so Bitcoin mining is able to soak up, become the buyers of last resort, and bring income that way when there's too much, and then when there's not enough, it can be sold to the people. So that's one aspect of it.
Do you think that will bring renewables to a situation where, I don't know if you know this, but is that subsidized in Texas at a federal level or a state level?
I think both.
Okay. But do you think that could potentially bring it to a situation where the subsidies are no longer required at all, or will there always be a mix of that, do you think?
It's a good question. There's other ways to subsidize as well, right? With the, I'm thinking more with the Bitcoin mining, the renewable energy credits, right? So to incentivize power that has been produced that way. I know that some of the Bitcoin mining community is looking into taking advantage of some of the IRA Act that was passed recently. But Yeah, it's a good question. It's hard to tell because the renewables haven't been, it's like they haven't moved out of the home yet. And so, I think there's probably always going to be a place for them, but unless we have a dispatchable load that is available, like nuclear or...
Yeah, I'm more thinking, what I meant, was more that, could the renewables come off of like taxation-derived life support, I guess?
Because you've got the Bitcoin mining subsidizing.
Yeah, whether it's so successful at supporting them that you could then say, okay, at this point, they're no longer completely unprofitable. We can remove all subsidies and you can actually have renewables function as a source of energy because you can make them profitable with the Bitcoin mining. I don't mean shift your entire energy mix to renewables only, but be able to make it economically viable that you don't need to subsidize.
It remains to be seen because the problem is it's still, and this isn't really a problem, but it's still a competitive market, right? And so they're still going to be competing with nuclear.
Which is better, right?
Right. And so I don't know.
Interesting. Yeah, that's interesting because it's just an interesting idea to think whether that's ever going to be an industry that's feasible without needing support, but I guess TBD. Okay, so we've covered the debate. I'm just looking at my questions here, the Bitcoin mining in Texas. One thing I wanted to ask you about in the Bitcoin mining in Texas was the regulatory thing, because you've been deep involved in that through the Texas Blockchain Council. And you guys have done some incredible work. And I actually interviewed Monica Gaudioso the other day as well. So she was
isn't she great?
She's great. So she was giving me the whole kind of thing about some of the legal aspects, which were really interesting. But she mentioned that Texas has a very specific kind of legislature where it only convenes every 2 years.
Yes,
and I didn't know that.
That's right.
So what does that mean for actually getting legislation through and the process? Like, how do things get, I guess, proposed and agreed and accepted or rejected? Like, what does that cycle look like?
Yeah, so it's a lot of preparatory work in the in-between. And so at the Texas Blockchain Council, we have working groups and we're thinking together with our members of what are some of the laws and the bills that we'd like passed. And we had worked very hard. We had 10 that we were behind or helping to put forward. But then when all the noise was made over the anti-Bitcoin mining legislation that was proposed, we ended up having to focus full-time on that, which was a bit of a shame because we did have a few of the ones go through, the proof of reserves one that we were working on, as well as the flare gas mining bill, which clarifies that if you're going to be mining with stranded gas, you're not going to need to pay severance tax, because that was a little unclear. Severance tax, when you're taking the resources out of the state of Texas and selling them elsewhere, then there's a tax for separating the resources from the state, severance. And so anyway, but a lot of the other stuff just got put on the back burner because we were focusing on the anti-Bitcoin mining bill. But to go back to your question, we knew ahead of time that most of these bills never see the light of day. It's extremely difficult to push it through because there's thousands of bills that are being proposed, but it's a very short window. So they have to make it out of committee in the House or the Senate and then pass on the floor and then move to the other House or Senate committee, floor, pass, and then signed by the governor. And so originally, when the anti-Bitcoin mining legislation came out, we were war rooming about it. We knew about it right away, and we were asking the miners themselves, do you want us to just sit on it quietly? Because there's ways to slow those things down to just run out the clock. That's the easiest way to kill something in Texas.
And what's the time frame from when something comes out of committee to when it would get signed by the governor?
Well, it depends. So the session itself is January to the end of May, but each of those steps requires moving forward, right? So it gets out of committee, but then it has to be put on the calendar for the vote, and then it has to get assigned to a new committee. And so every week we're checking with our people, like, okay, so the bills we're watching, have they been assigned to committee? So it all depends on if they're expediting it or if they're slow walking it. And The House is also different than the Senate because the Senate, it's a smaller group. They're there for longer. They have loyalties to each other. And so if a very powerful senator wants something, which was what we experienced with the anti-Bitcoin mining bill, even our closest allies didn't want to spend the political capital to oppose her. But they knew that once it got to the House, it's a totally different story because, it's just different over there. There's a lot more of them. They don't have the same loyalties. And so sometimes it's easier to slow it down in the House.
And if you slow it down, does that mean you just run out the clock? And can that bill then be introduced again in 2 years' time? Like, could it go through the
Sure,
cycle?
it could be introduced again in 2 years' time. But that's a long way away.
And how much political kind of power do the mining companies have now? Because it's not just the Bitcoin miners, it's also the oil industry, I guess, in Texas has a vested interest to see this flourish. Does that bring a strong enough coalition of industry together?
Well, I wouldn't say that we've got the oil industry on our side just yet. I mean, they're kind of indifferent because they don't have to sell the gas. I mean, compared to what they're making on the oil, it's not really much of it. It's nothing compared to the kind of profit that you can make in the oil. There's also, there is very wealthy elements that are much stronger coalition than the Bitcoin mining community. For instance, the peaker plants are power sources that are just available for times of emergency. And I think that there is elements that would like to build out their own alternate grid, and so not even deal with the Bitcoin miners, right? So you develop these peaker plants so that they're there for the times of emergency, but they're not really useful for anything else. So the Bitcoin mining community, we're a lot smaller, and we don't have nearly the kind of capital that like some of those bigger elements have. And so it's been such an honor to work with Lee Bratcher because he's been working on this. He's got relationships in the House and the Senate, and he's been working in coalition with ERCOT, our grid. ERCOT will call up the Texas Blockchain Council and say, we see there's a miner still on. Can you get them to turn off? And they don't tell us who it is, but so we've been trying to work with the miners to get them to work closely with ERCOT so that there's a good relationship there, because some of the people on ERCOT, particularly Brad Jones, who was brought in as the interim president after the winter storm Uri, where they had so many problems, he's very supportive of our industry, but there's other people that they don't know how they feel. And so it's a mixed bag, and we don't have nearly the political clout that some of these, like let's say steel or, some of the other industries that particularly so one of the things that there's been pushback with in Texas is there's different ways that miners get incentivized to shut down in times of emergency, because you're shutting down your business, and that's not nothing. And so sometimes we just do it because we want to be good grid citizens, and there's a need, and so we'll shut it down. But there's also an economic incentive. So you can fix your power price. So you get that fixed, and so you're getting it at a certain level pretty cheap. Well, when there's a time of emergency, the price is going to go up. And so then you can shut off and sell that power back to the grid. Now, that's not a majority of the miners, but the ones that have the fixed power cost, then they can do it that way. But there's also what ERCOT calls the part of their ancillary services. And that's when ERCOT will pay a company to be on call to do whatever they tell them. And so if they want them on, they need to stay on. If they want them off, they need to shut off. And so ERCOT is paying them to do demand response. So we're paying you to do whatever we tell you in times of need.
Was this the one that there was some controversy because they were saying that they're just paying is more profitable for Bitcoin miners?
Yes. So this is where the misunderstanding is. So they're thinking about the ones that are just economically incentivized. So they've got a fixed power price, or it could be that they don't have hedged power, they don't have a fixed power price, but suddenly the price has shot up, hundreds and hundreds of dollars, $1,000. Well, it's not worth it to them to keep mining. So they just shut off because they're losing money, theoretically. But the thing is, sometimes that volatility is short-lived, and so sometimes they will stay on just because it's like, well, I don't know how long this is going to last, and it washes out, it evens out. And so some of them turn off because it's too expensive in times of emergency. Some of them shut off because they can sell that power back to the grid because they negotiated the price. But then there's the ERCOT ones that are ancillary services. They're being paid to do whatever ERCOT tells them. Okay, so that is where some of the more legacy industries that can't shut off as quickly. I mean, the Bitcoin mining community, the beauty of it is the alacrity with which they can just shut off in an instant, right? And it doesn't really damage their product, and then they can turn on. I mean, it takes probably a half hour to get up and running again. But then you've got, let's say Big Steel or, those other industries used to be making a lot of money by being part of the ancillary services with ERCOT, and now they're being outbid because the Bitcoin miners can offer, okay, we'll do that for you for less of the price. And so the anti-Bitcoin mining bill that was proposed, which never made it to, it never made it past the finish line because we slow walked it. They were saying, well, we only want Bitcoin miners to be 10% of the ancillary services. But Bitcoin miners already are 10%. And so basically, a lot of that legislation was trying to protect the more legacy industries because the Bitcoin miners are kind of grabbing it up because they're better at it, they're quicker at it.
Yeah, it's ironic actually that those things had that kind of an impact. Can you talk a bit more about the sustainability piece? Because you touched on that with the gas flaring, and that's something that always comes up in the press about, like, oh, Bitcoin mining is bad for the environment. Like, can you talk a little bit about that in context of why that is, why that happens, and what the realities are actually on the ground?
So the funny thing about this push against Bitcoin mining, it's very unique in that it's discriminating against the use of energy, right? Because when you're plugged into the grid, there's no way, unless you're behind the meter, so unless you're actually at the solar farm and it's before the power goes into the grid, so to speak, well, then you're getting solar energy or wind energy. But otherwise, if you just plug into the grid, let's say you've got an electric vehicle, you don't know what percentage of that came from natural gas or what percentage of that came from solar. And so it's kind of a new thing, a new way of discriminating to say, well, just because you're mining Bitcoin, that's bad, you're using power. Well, everything uses power, like, Christmas lights or the bank or, like whatever, this room, it all uses power. And that power is coming from a number of different sources.
I read a source, and I want to say it was from NIDIG. I could be wrong, NIDIG or Galaxy, but it was a stat that said that the banking industry uses 56 times more energy than Bitcoin mining.
Interesting.
Every year. Yeah, which is nuts when you think about it.
Yeah.
I mean, that's like a huge number.
Yeah. And all of that is on grid, right? And so Bitcoin mining is so unique because it also has all the off-grid options that we spoke about earlier.
Do you know what the percentage is that's off-grid?
It's not a large percentage. It's a very small percentage that's off-grid. I think Lee was telling me the numbers, but it's only a few percentages that's off-grid. But then again, I mean, it could be growing. I'll have to do some research about, some of that stuff that's coming online, from these mysterious sources. I'd be curious what the power usage they're using.
Yeah, it's interesting. And so what's the reality on the ground then, really, with Bitcoin mining? Because we know that it captures methane, and we know that there is like some usage of renewable energy for actually doing the Bitcoin mining anyway. Like what's the kind of realities you see it from your experience?
Reality meaning percentages?
Yeah, like reality is in like the environmental aspect and like the benefits, the pros and the cons, I guess.
Well, I think the it's hard to talk about the cons in the sense of like, what are we talking about exactly? You're talking about the fact that it uses energy, and people push back against Bitcoin mining because they think it's a waste of energy, right? It's all these computers doing these, in their mind, meaningless. But if you're talking about, no, this is a sound money system that allows the unbanked all over the world to be banked. It allows for peer-to-peer transactions. It's censorship it's censorship resistant. It's trustless. Like all the values that we value in Bitcoin, we think, well, that's a good use of energy, right? Like, especially when we take ourselves outside of the American or, the Western perspective, and you look at other places in the world where they don't have access to the world reserve currency. Their currency may be deflating very rapidly. I mean, I think about, was it Lebanon, that their currency devalued by 90% on February 1st. And so just those of us who love Bitcoin and think about Bitcoin and talk about Bitcoin, we're like, this is such a good use of energy, right?
Probably the best use of energy, or one of the best ones.
Yes.
Maybe aside of like heating or cooling your home, I guess.
Right.
Or medical equipment, running like medical equipment for hospitals and things like that. But
exactly. And then people are also confused about, well, why does it need so much energy? Can't you make it more efficient? But that is actually, it's a feature, not a bug, because it protects the network, right? So there's no way to go back and change the digital ledger, because it takes so much power to successfully find the winning hash that allows that block to fit right in the chain. And you've been competing against all the other computers in the world, such that you can't go back and change the digital ledger, because then when you hash that output, it's not going to fit right. And so it prevents this 51% attack, right, where you take over the network and you change the ledger. So there's no getting around that it's going to take energy, but all things of value take energy. So when they talk about harming the environment, it's a bit unfair. But, yes, it uses energy. There's no getting around that. But so does everything else in the world. And I mean, there's a big push for electric cars that uses power, that uses electricity. Where does that, so. But when you talk about the good things,
when you just mentioned that, I was just thinking about Bitcoin Pierre's video. The emissions
Zero emissions. I know, that was so funny.
That was just the best troll ever. I loved it.
And then you see all the memes coming out, like, let's run the numbers.
But the funniest thing was the comments that people were actually going, I can't believe he's saying this.
Right. It was just gaslighting, right? It's like, you'd think it's April Fool's, but it's not. It's like, well, why don't you just actually go after what he's actually saying rather than the ad hominem attacks? But what we were talking about was the environmental benefits of Bitcoin, and that you've got the methane capture, you've got the building out of, like, as we were saying, wind and solar, another income source for them to make them profitable. You've also got, in Texas, the more power, the better when you're in times of emergency, right? So if you're going to be building out infrastructure, that costs money. So whether that be renewables or not, it costs money to build out infrastructure, and the signal to build out more infrastructure is more demand. And so when you have Bitcoin miners coming to Texas and wanting to use power, that's actually a good thing. People worry that it's going to send the price of power sky high, but not necessarily, because you're going to be building out more and more infrastructure. Exactly. And you've got more and more customers that are a flexible load. So a power user that is able to shut off. So now you've got a bigger and bigger and bigger grid that is able to shut off in an instant, so that you've got all that much more power available in time of emergency than you would have before.
Right. That makes sense, because I guess my understanding is that's a similar thing with gridless in Africa, right? Where they're making it economically viable to build out a grid in remote locations.
Yep.
And then where the mining is no longer profitable because there's so many people living in the community that can afford electricity now and need it, they just take their miner and they move to the next location and start the process again, which is actually phenomenal.
It's so beautiful.
Yeah, it really, really is incredible. I wanted to shift as well and ask you a little bit more about Noah's Bitcoin then, because you started this education company, and I think you've only got 2 videos out on YouTube, but they are absolutely phenomenal. One of them I actually put out on my Substack the other day because I was going through looking for, it's actually really hard to find educational videos of Bitcoin. So I did a training session like last year some point on Bitcoin mining, and I basically had to repurpose that and shorten it for a 101. Like I just did a voiceover with the deck that I'd used because I couldn't find a single basic explainer. So the really good one that you sent me was the one from Upstream from Steve Barber.
Yeah.
But that's like an hour and 13 minutes. And that's very deep in the kind of whole oil industry, Bitcoin mining piece. You did a really great one, which was the sustainability one. So that one I stuck on the Substack after my 101 one. But can you talk about how you got into doing the education piece? I think you're incredible at it, and actually it'd be great if you did more. But how did you learn how to do that and put that together? And like, you know, where do you think you will take that, if anywhere? Is that going to carry on?
That's a good question. So I started there because, as I said earlier, I cannot talk about what I'm passionate about. And so when my job had ended and I had some severance pay, I had a summer, and I sat down, and the original video that I made, the What is Bitcoin one, it took about a month because I did every part of it, and I've been learning the Adobe software. So I remember that time period where I just had to sit down and create a basic talk. And, you know, there's the short video that I made, but also just the 30, 45-minute presentation that I would do. And you know, it took time to just sit down and think about it. How do I explain the case for Bitcoin? But then I guess I got distracted because then I got my financial license and working at the RIA. I made the stranded gas one recently because of the private equity work I was doing at the RIA. I was just so taken by this stranded natural gas. And I'm like, oh, it's a waste product when you drill. And so I don't think I'm very smart myself. And so I'm always just like, well, let's make it so that I can understand it. And then, you know, make it simple for everyone. So I'm like, okay, what's the beginners? How do I explain this whole new world of stranded gas Bitcoin mining? So that's how I made the second one. I have been, you know, busy with the raises for the private equity stuff and the RIA stuff. And then with the Texas Blockchain Council. And so now I've kind of stepped back a little from the Texas Blockchain Council work and more into the stranded natural gas raises, the private equity stuff. I've thought again about working on some more videos, but I do find myself just kind of always going back to the basics.
Yeah. Well, I think just something that had the basics about mining would be really helpful. And I think also the basics about the economic incentives, because I found my conversations with you about the investment thesis around Bitcoin mining were just really interesting. And I think people don't understand those in really in a lot of the Bitcoin community, but in general in the world. You know, about like the capturing the methane, the free/very cheap energy, the, you know, the investment in like, how do you actually invest in this industry beyond just buying Bitcoin?
Yeah.
Like all of those things are really fascinating. And it's Bitcoin mining is such a strange industry in some ways, because you kind of wonder, like, was there a foresight that this would go this way when the white paper was written? Or is it just this unbelievable happenstance that it kind of worked and it's so beneficial for the environment and for like the industry and everything else? It's very strange how it sort of sprung up.
When I was working on staff at the Texas Blockchain Council, I was doing a lot of interviews with just different people in the space. And I had a really fun one with Neil Galloway. And he was in the Bitcoin mining space from the very beginning.
Who is that?
Neil, he works now at Rebel Mining, but he used to work at Compass, and he is a miner from way back when. He was on the boards when Satoshi was posting, and so he went way back. He has a hysterical story about when he was mining Bitcoin at a storage unit because it had free power. So, way back when he was like getting free mining. But apparently, so he told me that there was a lot of debate when the ASIC computer was created, because it used to be you could just mine with your
computer, your laptop.
And so ASICs kind of centralized things. because before anybody could mine Bitcoin, and now your laptop can't compete. So it's funny. And back at the day, I can't remember if he said he was against ASICs at the time because it was against the whole ethos of Bitcoin to be decentralized. But now, now it's just kind of a part of the way that it unfolds.
I mean, I think yes and no, but in some ways it is a lottery at the end of the day. So, like, the whole thing with Blockstream's little miner and the nerd miner and, all these kind of things that are coming out. In theory, you could have your own little mini miner and you might luck out and you might get a couple of Bitcoin over the course of 10 years, let's say.
That's true.
Which would be significant in 5-10 years' time. So I'm kind of like, I don't know, I think there still is that little Bitcoiner. There was a really good podcast somebody sent me, actually, and I can't remember who the interviewee was. And I actually cannot remember even who the interviewer is. This is terrible. I'm going to have to put it in the notes. But the guy had basically worked in Bitcoin mining firms for a long time. He was doing crypto more broadly at some point. And he was saying that he was really concerned about the centralization of mining in mining firms because they are regulated entities. They're companies that have physical locations that are potentially subject to seizure. And he was saying it's really bad for the decentralization. Yeah, and so he was kind of saying that even if you're not mining at home, you should be ready to and be on standby and have the equipment and know how to do it. I don't know if you have any thoughts on that. I'm just throwing that out.
I'm just thinking off the top of my head, but I went to a very interesting debate about are fossil fuels the future of mining? And it was Steve Barber and, gosh, I can't remember the guy he was debating, but Steve had a hard job because it was like versus everything else you could ever think of. He had to defend fossil fuels versus everything else you could ever think of, including nuclear. Right. And I came into the debate thinking, well, nuclear is the answer, and so no.
And he thinks no.
Well, a point that he made, which I thought was really interesting, is nuclear does take a lot of money to build out. And so there's something centralizing about nuclear, right? Because oil and gas, stranded gas, biomass, whatever, like that is more decentralized. And but if you're going to talk about nuclear mining, which I think is cool, I think it's I'm all into mining no matter how it comes about. But it was a very interesting point that it is only for like the home miner is never going to be nuclear mining, because the amount of money that goes into building.
You say that, but what was the company called? There's a company that's building out these mini nuclear kind of generators. I don't know how legal it would be for one to do it oneself, but they were, oh my God, what was it called? But they were like small containers that were just more transportable. So you say that, but it might be that if that really proliferates and it becomes this technology is so good that it's so safe that you could just plonk one outside your home and that's or
under the ground. I think a lot of the expense in nuclear is actually the security for it. So it's interesting.
Interesting. Okay, well, I think we've pretty much covered everything I had on my list. I don't know if you've got any final, glancing down at, have I talked about everything? Yeah, I don't know if you've got any final thoughts about this, about like where you think the Bitcoin space is going to go, what you want to focus on in the next few years.
I am so loving being a part of Bitcoin now. I say this a lot to my friends because I go to a lot of the Bitcoin meetups. I know a lot of the miners, and building during this time, a lot of the grifters have been washed away, and the people that really see the vision and love the vision have stayed, and we know each other, right? Because we see each other at meetups and events. And it's such an exciting time. Like I know who I trust in the space and I want to work with. And so eventually if Bitcoin goes up and, disclaimers, this is never financial advice. We don't know what the price of Bitcoin is going to do. But if it goes up again, I'm sure the people wanting to get rich quick are going to come running back. But we have had the privilege of being here during the building time and knowing, who the true believers are and the ones that really care about what this brings to humanity. So I'm excited about the future, and I know that whatever the future brings, new energy resources, whatever, Bitcoin is so creatively capable of going to those situations and making them better. So I'm bullish on the space, and I feel very privileged to be a part of it, especially as a woman, because there's not a lot of us in this space. You and I have spoken about this quite a bit, about we're disagreeable. No, that we like to think deeply, and we're not afraid to be contrarian, I suppose. Yeah. But such interesting people that are paying attention to what's going on in the world. It's always the most fascinating discussions. I did another interview with Gary Leland, which was really fun. He talks about he's the Bitcoin boomer, right? So older generation, talking about Bitcoin, and he says he meets people his own age, and he's just bored to death. He doesn't have anything to say because they're like, don't talk about Bitcoin. But then you go to meetups of people of all different ages and race, color, creed, whatever, and fascinating. It's
really interesting because it's the most inclusive community I've ever seen. Like
really
you said,
is.
You've got like all the ages, you've got all the nationalities, you've got all the political spectrum. I mean, it's really interesting that you sort of see. I find that what you realise, or what's helped me realise, is how these divisions between left and right, Democrat, Republican, how absolutely manufactured they are.
Absolutely. Yeah.
And I sort of say this to people quite often. I'm like, you take almost anybody in the Bitcoin space and you could be polar opposites politically speaking, and you will agree on like more than 80% of your view of the world. Yeah. But I actually think if you extrapolate that out of the Bitcoin community, that's often the case as well. Mm-hmm. It's just that in the Bitcoin community, you can have, I think, conversations that are not as tainted by kind of social structures or norms or things like that. So I found that really, really interesting. And just the fact that, you've got people like atheists mixing with Christians, environmentalists with oil producers, in a way that just... Yeah, but it almost feels more like what community should be like, and actually isn't, because there are outside forces that kind of manipulate that. And when we're in that Bitcoin community, it just feels more organic and more like what real life should be like.
Yes.
Absent the sort of manipulation, I guess, if you like.
Yeah.
I found it really interesting, and I think we met because I followed you on LinkedIn. Mm-hmm. You started posting stuff, and I was like, who's this person? This is interesting. Like, she's putting really interesting posts, and then we finally met in Miami, which was wonderful. And, now we're meeting again in Calgary, which is wonderful. And like you say, the Bitcoin community just follows each other around. So, I just want to say thank you for being in my life, and thank you for being such an inspiration and for challenging me on what I think and helping me think more deeply. And just thank you for everything you do.
Thank you. It's such a joy to be with you. Thank you for all you do. It's a mutual inspiration.